Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week, which has been really uncertain, a lot of risk, but also a little bit of good news. So as you can see, we have a mix of news from corporate earnings from Target and Home Depot, which are really important, that shows the consumer spending and the consumer profile right now against the tariffs. And then we have some economic data which are really mixed. Some PMI good news, existing home sales turning negative, and also jobless claims. And overall, we have that sentiment of really balance. We pull back a little bit, and we are going to analyze where are we in terms of the daily, which is really important. This is a point in which bulls and certain buyers need to show up. But first, let's go through all the fundamentals, starting with the economic data. Basically, the Global Purchasing Managers Index, the PMI data for the US, registered 52.1, coming from the previous 50.6. It's really good news. Composite, manufacturing, and services are showing positive trends, unexpected strength, I would say, because basically, particularly the manufacturing was particularly robust because we went from 50 to 52. Also, the services from 51 for 50.8, we forecasted a little bit of strength to 51, but we push 52. So services sector's activity accelerated more than anticipated. So are we thinking about this in terms of inflation or in terms of robust domestic demand? We will have to wait and see, because right now the Fed is silent. The Fed is waiting for tariffs to go through the economy, for the President Trump to just clear signal the landscape of tariffs, for the Fed to actively do something. But until then, we have to see this as robust and strength, I would say. In terms of the labor front, we have somewhat more mixed signals. These are initially signals of relatively high robust job work market, because basically we are initial jobless claims and continued jobless claims. We have mixed data. Jobless claims going down and continued jobless claims going up. So basically still tight, still there. And particularly the existing home sales it went to 4 millions. We are still in there. We are around 4 millions, which this was a slight increase from the previous 4.02, but I would say that the underperformance, this suggests that high mortgage rates and affordability challenges are still waiting on housing demand. Finally, in terms of debt, we have to really pay a lot of attention to the debt of the US. And the 20-year bond high yield showed a big jump from 4.8 to 5.05. This jump, higher yield, indicates weaker demand. So they had to increase the yield that they gave for demand to go up. And this is really bad, because maybe no one wants to buy US debt. And that's really a big issue. One of the biggest issues, I would say, that can change tariffs path moving forward. Now, in terms of corporate earnings, we have major retailers. We had Target and we had Home Depot. And both were negative. Both EPS came lower on the Home Depot and Target Q1, and basically this suggests that even though they are attracting customers, They are the sales that are providing are not enough. They were better than expected US sales, but the margin, the growth on those sales came lower than expected. And they are basically both showing the same. They are showing a slight increase in sales, but the margin and the growth, it's going down in both cases. So the full year guidance was below estimate. They are pricing in tariffs, and that's really bad. That's really bad. At the end of the day, I think we are neutral, slightly bearish, 35, I would say. The market pulled back, so it's not comfortable in these levels. So we have to really pay attention to what happens in the technical side of things. Before moving into the technicals, let me talk about the Fed's stance on monetary policy, because we had some participants, for example, Fed Bostic, saying that he is worried a lot about the inflation side of the mandate, their mandate, because his outlook indicates that it's leaning much more into a rate cut, but he emphasized that the path of inflation back to the 2%, it's maybe is going to be uneven because of the tariffs. Then Williams said something similar. The key word for the economy is uncertainty, because Trump's still pushing some tariffs, some weird deals, some unexpected executive orders. So the Fed officials face a big mixed set of signals. We have strong labor market with sticky inflation and concerns about future growth, highlighted by Target and Home Depot. So what they had to do, Fed Governor Cook said that she also is concerned about inflation, the prevalent inflation. And she has consistently pointed out that the tight labor market is helping, but is also a source of wage pressure. Overall, the Fed is really concerned. Waller, Goldsby also pointed out that tariff rates would be scary for the supply chain, which will imply higher cost and push on inflation. So what we have to do with this is just wait and see, because everything again is in the hands of the President Trump. In terms of some other big news that affected the market, so let me go through the Moody's recent downgrade from AAA to AA1, which is stable. Its outlook stable, but it lowered this rating, increasing the level at which US has to sustain his debt. Basically, this is concerning about the US house financing system. They said that though this is a stable outlook, this suggests that maybe there will be some kind of a little crisis about the sustainability of these tariffs. But basically, Moody's downgrade, it's also affecting the outlook from all these investors. And also in terms of tariffs, Trump said that Apple needs to go to the US. Apple announced plans to open some new investments in US, but they are going to India. And Trump really openly said in social media that Apple is going to be hit by tariffs. And Apple was down 3% on Friday. So all this makes me think that we are in a really, really volatile environment. Friday ended the week really bad. And I would say market internals are showing also some kind of buying the dip activity, but there was some big outflows on Wednesday. Look at this. Outflows, and Wednesday was a really bad day. Friday was also bad, but was neutral. And both Thursday and Friday were buying the dip on the S&P. On the Qs, we have something maybe similar, but technology sector is being hit way more. Look at the outflows. Look at this end of the day on Wednesday. Really decliners, and Friday with the gap down and trying to buy the dip, but people is not buying the dip as aggressive as they are doing in the S&Ps. The Qs are suffering. Why? Because Apple dropped 3%. Apple is clearly on a really on a really aggressive trend down. We are trending and trending and trending, and they are trying to find some foot, but they couldn't. They filled the gap, and basically semiconductors, let me show you. Semiconductors also pulled back a little bit. We are in semis in a really, I would say, gap, which may be something that buyers need to pay attention. In terms of the Qs, in NQ, we are also on a daily bullish fair value gap with this pivot, which is certainly all this zone, a zone of big buyers need to step in. That's what I was mentioning earlier. We need to see some buyers in this area. In the 1 hour, if we check the 1 hour chart, we can see the details on where we pushed and when we held price action. We have a daily there, we have a lot of pressure in the 1 hour, and we pulled back a little bit. But we went through all this. So that was expected. On the technical side of things, this looks decent. This looks good. I would like to see some more reaction here, but I would wait until this zone. The confluence in between the consequent encroachment of the daily bullish fair value gap and the pivot on the daily, which is the yellow. This is on the technical side of things, but look at the yields. Yields are still pushing higher. The end of the curve is looking insane at 4.1. More and more investors and analysts are not pricing in any more rate cuts this year because the Fed is not signaling any move, because the tariffs are not going away. Be careful with this. The 20-year was high yield. No one wants US debt. And the higher yields on the 10-year and the 2-year yield are also affecting the market. Be really careful. The dollar is still signaling a lot of weakness. US, in terms of geopolitical and worldwide activity, is weak. We have the technology, we have the NQ, but they are also being hit by the tariffs. Apple was really hit. Amazon, Google, semiconductors are holding on. We have something that no one else has, which is AI, which is big, magnificent seven. But they also have business outside. We need partners. We need imports. And we are paying a high price in this environment. So how long can the NQ sustain this? I don't know. But what I would say is that on the technical side of things, we have certain setups, but fundamentally, the US market is not attractive. The US market needs some kind of support from either tariffs going away or Fed supporting the market by cutting rates. If nothing happens, this is really, really fragile. This move is really fragile. And we have to manage our risk really, really well, because it could, in the blink of an eye, we could have certain moves like 1,000 points and things like that, just with a tweet, just with a post in social media, just with an article. We are we are pretty volatile right now. Look at this spike in here on Thursday and Wednesday and Friday on the VIX. This is nothing like this, but this is something to worry about. Volatility is here to stay. That's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this on Saturdays for the weekly recap, and also going through everything from the fundamental to the technical side of things, every sector, dollar, semiconductors. I try to provide as much value and information for you to take actions if you need them. And my understanding of the markets, I think, will help you a lot to navigate what is considered one of the best jobs in the world, which is day trading. Thank you for your time. Remember that discipline, patience, and risk management are key for your success. Stay safe, everyone. Have a nice long weekend, and see you on Tuesday.